Welcome to your latest YouTube News Roundup, where we dive deep into the evolving Bitcoin landscape and cover the most pressing headlines from this week. Bitcoin opened Tuesday trading above $115,000, buoyed by strong ETF inflows and speculation over a potential Federal Reserve rate cut that has the community guessing about the asset's next big move. Although institutional demand remains robust, analysts describe the current rally as fragile optimism, with significant profit-taking and cautious market sentiment serving as counterweights to recent gains. Volatility has compressed to historic lows, with technical indicators signaling an explosive move could be on the horizon. Previously, such setups have marked the start of multi-month Bitcoin surges, or brief fakeouts followed by rapid recoveries. Open interest in futures is rising and funding has turned negative, indicating traders are largely betting against Bitcoin, which may set the stage for a dramatic short squeeze if momentum turns bullish. The positive return this September defies usual seasonal weakness, and history suggests such green closes can lead to powerful fourth quarter rallies, amplifying expectations as Q4 unfolds. On-chain data highlights Shark wallets, accumulating nearly 1 million Bitcoin since July, while whale wallets reduce exposure, hinting at a possible distributed shift in market power accompanying increased altcoin activity. Technical analysis now pegs resistance between $117,000 and $118,000, and a break above this range could confirm a structural market shift. One analyst points to a weekly stochastic RSI signal that has previously preceded 35% rallies. Seasonality, historical patterns, and key metrics all align to forecast a decisive breakout, though short-term choppiness and the outcome of the upcoming FOMC meeting could sharply influence direction. While some network economists predict Bitcoin could reach $200,000 in the coming months, caution remains, as on-chain indicators reflect cooling momentum and liquidity clusters raise concerns about potential market manipulation. Corporate adoption of Bitcoin appears to be slowing, with a dramatic drop in new companies adding it as a treasury asset since July, reflecting possible caution among major players and a cooling of speculative euphoria. Stock prices of prominent Bitcoin treasury holders have pulled back sharply from their peaks, as companies who bought at higher prices face risks from rising interest rates and shifting market sentiment. Despite warnings that price retracements to $104,000 or even as low as $92,000 could occur, bullish voices suggest that a Fed rate cut would renew institutional buying and trigger another leg up for Bitcoin. Currently, over 3.7 million Bitcoin are held in corporate and institutional treasuries, and public companies alone control more than 1 million BTC, underscoring the ongoing influence of big investors. Technical levels to watch remain resistance at $116,600 and potential support at $110,600, $107,700, and $93,576. As Bitcoin consolidates, traders are keenly watching for a definitive breakout. Bitcoin's recent dip below $114,500 gave opportunistic buyers a chance to accumulate. If $112,000 holds, many analysts expect the bull case to remain alive, with volatility at levels that historically precede major moves. Every indicator points to an impending shift. Whether it leads to a blow off top or a deeper correction remains to be seen. Major macro events, especially the Federal Reserve's policy announcements, are poised to provide the spark that could end this period of fragile optimism and set the tone for the months ahead. For more data, analysis, and real-time news updates, be sure to check our sources and subscribe for ongoing coverage. Which way do you think Bitcoin will break? Are you betting on a big rally? Or do you expect a deeper correction? Let us know in the comments, and don't forget to hit like and subscribe for all the latest crypto news and analysis.